Thank you again for joining us today. First webinar for French cluster. This is a big one for us. We're very excited to have many participants from different areas, regions, different languages. We'll stick to English today, but we'll definitely make sure we touch on some maybe French specific questions. But again, thank you for joining us. My name is Stephan SALDIVIA. I'm a certified financial planner. I've been living in the United States for about 20 years and currently living in Santa Monica. And actually, I just moved to this new place in Santa Monica, and I apologize for the view here, but I'm sitting on the floor because I have no furniture. I just moved here, and it's impossible to go anywhere to buy anything. So, I'm gonna have to wait a few weeks before I can buy a table, and I'll be able to, I'll be a little bit more comfortable. But jokes aside, I just want to share a few anecdotes that I'm sure we can all relate to different, differently. But this morning I get up 6:30, I go for a jog. So, I go for a jog around the neighborhood just to keep, health as a priority, as we should all do at this moment in time. And you walk, you jog around and I see for rent signs, I see for lease signs. I see a little bit of a homeless population. I see a little bit of scared people. So as I'm running, I see people trying to avoid me. It's kind of a little bit of a game of Pac-Man when you're in the streets nowadays, right? People avoid each other. It's a very interesting scenery we're actually experiencing. And I'm trying to put things to perspective where I've said before that I feel like we're today in a situation where after 20 years living in the United States, it's a combination of what happened in 2008, obviously the crisis, housing crisis mostly, combined with an anthrax situation we also had, in the early decade, and also with 9/11. So today we're basically looking at a health issue, economical issue, and political issue as well. So I think, I really suggest that everybody stays very patient through this time. I suggest everybody stays try to find some clarity about longer term goals. Obviously this will pass. We're already looking to some regions getting out of confinement. It's been a tremendously humbling experience, I would say, for everybody, regardless of where you are, what situation you're in, you definitely have made some tremendous changes to adapt to the situation. And this adaptation will last longer than after confinement is basically stopped. So as far as like how is that going to affect your finances, that's what I would like to talk a little bit about today. So today, after I come back from my jog, I come home, I have some breakfast, and I look at obviously some numbers on my screen and trying to look at what's going on with the economy in general. And I look at my my indicators, and I look at about 50 different indicators on a daily basis. And out of 50 indicators, 48 are negative. So if we look at, for example, the S&P 500, right? So that's what you hear in the news the most, what reflects what the biggest companies in the stock market do. Year to date, we're about 15% down. Dow Jones about 18% down. NASDAQ a little bit less, about 8% down. I won't go through every indicator, but I just want to give you a little bit of perspective. The only indicators that are up today are, I can see the yen is up, compared to the dollar, slightly 0.86% year to date. So nothing really dramatic there, but just that's the only positive I see. And gold, okay, so I see gold being about 12% up year to date. So my point here is that we're in a crisis where we're definitely in at least a technical recession, which means that we have a stock market that came off an 11-year bull run, basically. So we had, since 2008, we had about 11 years of uptrend in the stock market, and most people did fairly well. So your 401k did appreciated, or your IRA, if you were at least positioned to a certain index. But that has changed, okay? So February, end of February, early March, you start seeing a decline. And the decline was exacerbated dramatically when we, announced that the travel ban was in place, that we were confined, and that we were facing a true crisis, at least with the coronavirus. So this is a reality we're in today, and I won't make too many suggestions about what to do, what not to do, because it does come down to a very personal situation. So as a financial planner, I would have to ask you more questions before we get into a situation about, you know, how to basically invest your money or position yourself in a situation where you can basically navigate through this crisis. But what's important to remember is that there are opportunities that are definitely positioned for the long term. The main question today is like, how long is this going to last, right? That's, everybody's very impatient to find out, you know, when are we going to get back to normal? And I think there's several things to look at it in that situation. The first one is that we're dealing with a virus situation. That's one. Then we're dealing with a economic situation, completely separate, related to a certain degree, but completely separated. And then we deal with the stock market, which is not reflective of the economy necessarily, or what's going on with the coronavirus. So I'm going to try to like basically touch on these three different entities to clarify a little bit our situation. The coronavirus situation is a real situation that exposes us to health risk up to death for many people. It's a very, very you know, sad time in our history, and I think we'll be remembering this forever. Again, I think for many, many years being here, I know that this will have a traumatic effect the same way 9/11 had, 2008, and other situations. But at the same time, there will be good things happening, and we will come out obviously stronger at a certain point. But the coronavirus situation, basically, which is what pushed us into quote unquote a recession, is something that we don't control. We simply don't control. Every health expert right now is divided by different things. We're talking about the fact that it may come out again next year. I mean, it's a pretty precarious situation. I would not comment more on that. However, that has precipitated our recession. So we were already looking to, again, after a bull market going on for 11 years, based on the economical cycle, we're waiting for a recession to start, kicking in, which is not necessarily unhealthy for people that were waiting for certain prices to come down, for example. So now this has been accelerated. So recession has been accelerated. We're in it right now. The idea now is how fast the recovery will be. There's been different things happening. There's been obviously the biggest one, the government intervention, $2 trillion injected into our money supply. It's in economical terms, it's never seen. I mean, it's historical. The government has basically prevented us from a total collapse. That's the good news, that we still have a government that's capable at the moment to basically save us from a more than a recession. I would say more something like a depression at this level. And the government is playing a tremendous role today. It has, as Frank was saying earlier, in terms of taxes, it has changed many rules. For example, 401k loans, IRAs without the 10% penalties. Basically, it's encouraging people who have liquidity issues to basically tap into that without having to get into more, financial distress. So the government is helping, and I think that's a good thing for the moment. The concern is how long can they do that? As some of you who are following more closely a bit, the economy, you would realize the Federal Reserve is playing a huge role. The Federal Reserve basically has lowered interest rate to almost zero, which means that money is cheap today. You can get loans, you can do, you can use debt like you've never been able to do it before because interest rates are extremely low. That is somehow helping, obviously, the economy keep afloat. But the problem is that you cannot go much lower now as far as cutting interest rates. So in that sense, the Federal Reserve has kind of exhausted that monetary policy tool. What's left is to inject money. So basically money supply by buying treasuries, the government, basically injecting money into that. I apologize for the background noise, but I think the garbage truck is coming by. So what's left basically for the government to participate still in more small programs like small business programs, injecting money, making loans very much more affordable. And these are the opportunities basically. As a small business owner, as somebody who's like basically looking for a little bit of a break, you will get that at this moment. This takes me to another kind of perspective, which is the fact that we, at least in the United States, even though this is a global crisis, we're dealing with a system that's still able to absorb, most of the shock, and new regulations are being, drawn every day, and I think the key here, the main goal of Federal Reserve basically is to keep the American people, the economy basically functioning. We cannot get into a situation where basically we get to a complete crisis in terms of unemployment, for example, or in terms of housing crisis again, although that's obviously a concern. There are many things, again, I won't be speculating on what may or may not happen because it's too soon. I will just redirect your vision, if you can, at this point, to a much more longer perspective. So if we think that nowadays the market has hit a low, we don't know if it's the bottom, but it's a low, that would definitely create opportunity for the longer term if you position 5-10 years horizon, because we basically have valuations now that we've never seen before, the opportunity to get in certain sectors. I will quickly give you a perspective on, for example, energy nowadays is 45% year to date down. So since January, the energy sector has taken a huge hit, right? Could it continue? Of course. Will it ever go back to a positive? Of course. When? I don't know. But that's when the financial plan comes into place, which is, I would look at your finances as basically a portfolio of every money you have is earmarked for a different project, right? So you have money, you go buy groceries, you buy some eggs, you buy shoes, you buy a car, and the money has a different purpose for each purchase. If you purchase a certain stock, you need to know how long you're going to hold it for. If you try to day trade today, good luck, because it's an extremely volatile market. And if you don't have the experience for it, you don't have the temperament for it, and you don't have the finances for it, you could suffer tremendously. This is not a time for anybody to try new things out of desperation, because I think that's where most people get hurt. This is a good time to reevaluate your situation, find the opportunities that have been given to us, whether through employment benefits temporarily, whether it's through, again, some fiscal relief or loans. There are opportunities out there, but it does take, obviously, for you to reach out to professionals who can help you out. I would not go online and look at different things and try to see who's saying what, because you obviously would get confused very quickly. You probably want to talk to people who have been around for a long time and can really basically prevent you from wasting time and wasting money as well with a lot of schemes happening, by the way. Be careful of people calling you pretending to be from the IRS, or people calling you for tremendous opportunities to do certain things. This is the time to be, again, back to normal. I mean, back to basics. Stick to fundamentals, principles. Do not try to, again, just do crazy things, because the chances are that it will not work, and you may not recover from it. So I hope that this kind of give you a little bit of perspective, at least from my lens as a financial planner. I am going to see if I forgot anything that's worth mentioning. The recovery, right? So everybody's talking about, again, how quickly can we recover from this? I personally don't know, but we've seen good signs, though, with the market trying to rebound fairly quickly. In the past 2 weeks, we've seen, like, I think 10 to up to 15% rebound in 3 weeks, which is basically unheard of as well. So what we're experiencing today is a tremendous ability for the market to collapse quickly on the bad news, but also as soon as good news come up, the market reacts. Does that reflect the economical fundamentals or reflect what's going to happen in the future? Absolutely not. The stock market has a mind of its own. It's a game of speculation for many. It's a game of predicting the future. It's a game of looking for opportunities. It does not reflect what's really happening. It just, some people have been sitting on cash for a little bit. They're finding opportunities right now to inject cash, and they will do that. That's preventing the stock market from basically downfalling, to an extremely low level. That's the good news. The good news again that we're in a system that's still somehow resilient when we really understand what we're facing. We're facing basically one of the biggest challenges I've personally experienced. So this is something that we need to keep everything to perspective and as I was saying earlier, go back to the fundamentals. So I will kind of finish a little bit my monologue here, which I'm not crazy about. I wish I would have a little bit more of interaction and question, because I know each person listening may have a very different situation, and I would love to touch on that. But again, to keep it general for the audience, my last point basically has to do with the financial plan. So the financial plan is your situation. What you control today the most is going to be your reactions to this situation, not so much what's happening. Some people will react in a more desperate way, and some people will find more a little bit of more wisdom through the process. And I think it's important for you to go back to the drawing board and say, okay, if I temporarily lost my job, it is a time for me to reevaluate my long-term plan in terms of career. If I was planning to buy a house, this is the best time to do it. If I was planning to do certain things, should I wait for that? If I was about to retire next year, should I wait a little bit longer? And there are different answers for different situations, because we would have to look more precisely into your plan, which again is based on what is your budget, basically. What is your protection situation in terms of insurance? Where is your fiscal situation? Can you have some benefits from the the taxes at this moment? And these are again questions that are very specific, but I would really encourage you to go back to that and have a plan. Basically, have a plan of that you can execute to basically get out of this crisis. And I would again say that there are opportunities nowadays that we also have not seen in terms of long-term investments. It depends of whether or not you have that money for it or not. If you have more urgent matters, then you cannot really participate in certain things right now. So I hope that this gives you a little bit of a perspective on this current situation, which is extremely complicated. And I would kind of summarize it by saying that we're in a mix of it's a disruptive time that will lead to an opportunity for adaptation, ideally better adaptation, and also for opportunities that again we haven't seen in a long time. So I think that there may be some question. Alain, can you maybe
I don't see any questions so far, but again, we will be able to answer emails
okay.
if they come.
I just received one email question that we'll just answer very quickly. It's one. I have 4 questions, but I'll just pick one. And do you believe that the financial market will come back to the same levels as before the crisis? If so, how long will it take? Absolutely, absolutely. I think the market has shown historically that no matter what has happened, it's designed to keep on progressing, because it's just part of the economy. The investment aspect of the economy in the United States, whether it's through 401ks, IRA, is basically almost a necessity. So the market will obviously go back, will make it through this crisis. The question, how long, I don't know. Some experts have talked about about a year recession overall. That was even the plan before the coronavirus. Coronavirus is throwing a curveball at us. We don't know, but I would stay within that, you know, that range, give or take a few months. But that's yeah, that's my view.